Hey, good morning. This is Mayor Vilensky with Driving Markets. Driving while talking about markets. Anything said in this piece is an opinion only. Not financial advice, not investment advice, etc., etc. Any losses, any profits are yours. Let's kick off. So I really want to focus today on the difference between the Bank of England and the US Fed. Yesterday, the Bank of England raised interest rates in the UK by 75 basis points. Let's dig a little bit deeper into that and let's just understand what is going on there. So inflation in the UK is running at around about 10%, probably going to go to 13%, especially with the energy prices and the cost of living in the UK going higher. So Andrew Bailey, who's a very poor chairman or governor of the Bank of England, he really has no idea, hasn't got the foggiest what's going on. Him and Joe Biden are more or less very similar. He doesn't understand economics. He's completely lost touch and out of contact with what's going on with Joe Public in the streets. So he increased interest rates by 75 basis points. Now that was the highest increase since 1989, the highest one-off increase since 1989. All seemed fair and good because I've been calling for interest rates to go up a lot faster. Now what he's done this year, he's put up interest rates 8 times, but at 25 basis points, 50 basis points, but never 75 basis points for this year, and this is the first time he's done it. So what normally should have happened is that was unexpected and the pound should have shot up, but instead the pound was absolutely trounced and came down significantly. And the reason being is because the follow-on statement from the Bank of England to the analysts and to the traders and to the banks was that for some reason the UK Bank of England believes that interest rates have now more or less topped out. They're not going to be going up much further and everything looks rosy. I mean, where are they at? What the heck are they talking about? Inflation is rampant in the UK. Interest rates need to rise and they need to rise fast. And the Bank of England comes out with a dovish report. Dovish means a soft, light report saying that interest rates are not going to go up as initially expected. On the back of what? Have we had a massive drop in inflation? Is there a fall in employment? Is unemployment rising? On the back of what does Andrew Bailey and his team of supposedly super analysts believe that inflation has peaked out and interest rates don't need to go up because he's fearful of a recession? He's fearful that by putting interest rates up, there's going to be a recession. It's not interest rates that are going to cause a recession. It's Andrew Bailey's lack of understanding of financial markets is going to cause a recession. What they should be doing is they should be putting up interest rates continuously and aggressively to give confidence to the world that the Bank of England and the UK is handling inflation, and he's doing exactly the opposite. So traders, investors ran for a mile, they sold the pound, off we go again, the pound falls due to Andrew Bailey's incompetence as a governor of the Bank of England. We're now waiting for the 17th of November, the report to come out, the budget, the mini budget or interim budget by Jeremy Hunt, and then we'll see what's going to happen there. We'll see how Jeremy Hunt is going to handle the budget in light of present economic slowdown in growth in the UK. Now let's take that conversely, let's have a look at what happened in the States. So in the States, you had Jeremy Powell, after the 75 basis point increase in the US, came out with a hawkish report that interest rates are definitely going to go up and they're going to go up much higher in order for them to fight inflation, and that pushed the dollar up. Look at the two statements. Jeremy Powell comes out with a hawkish statement. Meanwhile, Andrew Bailey comes out with a dovish statement. So obviously the pound is bought, and obviously the dollar is bought and the pound is sold. Excuse me about that. I was just looking on the directions which I was going, so I wasn't focusing. So they bought the dollar and they sold the pound. That's obvious because now what you've got is a clear divergence in between the UK and the US. You've got the US, which is aggressively going to increase interest rates, and you've got the UK, which is going to stop increasing interest rates. So where's the money going to go? The money's going to go into the dollar. It's absolute disaster. And Andrew Bailey, who was ex-head of the FCA, the regulatory authority in the UK, and it made a complete shambolic mess of that, needs to go. It's quite simple. He needs to go. End of story. Now, what you've also got today is you've got the unemployment numbers in the US, and that'll have a big impact on the dollar and on financial markets. If that comes out stronger than expected, then you can expect interest rates in the States to go even further, which will then put more pressure on the pound. So at the moment, what we've got is a weak pound, we've got a weak governor, we've got a weak Bank of England, we've got a weak economy, and therefore everything is going to struggle as a result of the poor tactics of Andrew Bailey and his team of cronies. All right, that's where we're at regarding UK and the US. There's not really much else to talk about because that is the focus of the day. The pound looks like it's going to go down further, unfortunately, due to complete lack of management by the UK. Elsewhere in financial markets, you've got yesterday the markets went up and then they came down. There's a lot of volatility on fears of inflation. I know it's hard to believe inflation's back on the agenda. Interest rate rises in the US are back on the agenda, and that's having a big impact on equity markets, pushing them down even further. Let's see what the numbers are out today on the NFP, the non-farm payrolls, and we'll catch up on Sunday and Monday, and I'll see where we're at then. Okay, so this is May Walensky with Driving Markets. Driving while talking about markets. Contact me, subscribe. More than happy to help. Comment. Speak to you soon.